Good morning, everyone. You are watching a live daily market outlook for Thursday, 12th of April 2012, prepared by Windsor Brokers. And no much action seen in the markets during the past 24 hours as euro remains in a way limited on the upside, as still fear remains within the investors about European debt crisis, as well as global economic uncertainty, which is still high. The upside, the pair, the euro-dollar currently is around 131.40-50 zone, testing the upside levels of the past couple of days range, but action is still seen limited, and we need to see some a stronger move higher in order to break the current rather negative structure. As mentioned about global world economic uncertainty, the comments of Bank of Japan Governor Shirakawa on during the Asian session, that the major risks to global growth, even if it's just towards the Japan's economy, is headed for a moderate recovery, and he signals the bank's readiness to maintain its ultra-loose policy bias. Shirakawa said that Japan's economy is showing signs of picking up, with the public works spending on the rise and the company's capital spending on a moderate uptrend due to rebuilding from the last year's devastating earthquake and tsunami. But also he said that global economic uncertainty remains high, given Europe's sovereign debt problems, rising commodity costs, and the tough balancing act that emerging economies face in trying to rein in inflation while sustaining economic growth. He said that generally the global financial markets are stable as a whole, but some the investors and the lawmakers need to stay mindful of the risk that Europe's debt problem might affect Japan and the rest of the world through market developments. Shirakawa's views on the economy were roughly in line with those of the government of Japan, which maintained its assessment that growth is slowly recovering in a monthly report issued earlier today. From the European side, the euro, as said, the euro and the European stocks are expected to tick higher today. There is Italian sorry that there was a small disruption in the in transmission. I think now we're back okay to the normal. As said, the European stocks are expected to jump a bit higher today as continuation of previous session recovery following the last week's slide, but gains also could be limited as investors are looking for a key Italian bond auction today. From the other side, the release of Australian employment change and unemployment rate today, that employment change came in a quite a positive figure. 44,000 is the release for today, compared to 6.4, only 6.4 forecasted, and minus 15.4 of the previous week, as well as drop in the unemployment to 5.2, actually unchanged from previous month, 5.2, but forecast was 5.3. That gave boost to Australian dollar, that rallied, jumped actually strongly higher, hitting a zone at 104. That was the latest high seen in early hours of this morning. Other significant things from economic indicators today, as mentioned earlier, it's European Central Bank monthly bulletin due at 8 o'clock GMT, and then a series of releases from UK, Eurozone, and America, starting with the Great Britain's trade balance that is expected. This is due at 8:30 GMT, and is expected to widen. The gap is expected to widen to 7.7 billion sterling compared to 7.5 billion sterling gap of the previous month. European industrial production is due at 9 o'clock GMT, and contraction of minus 0.2 is seen expected for today compared to increase by 0.3% of the previous month. Americas start with the Canadian trade balance at 12:30 GMT. That is expected to build up to 2.2 billion Canadian dollars compared to 2.1 billion Canadian dollars surplus of the previous month. From US from Canada, and new houses price index is due also at the 12:30. 0.2% is forecast for today compared to 0.1 of the previous month. From US, monthly PPI for a month of April is due at the same time, and 0.3% increase is seen for today, expected for today compared to 0.4% of the previous month. US trade balance is forecasted today at minus 51.9 billion US dollars, which shows expectations of narrowing the trade gap compared to 52.6 billion US dollars gap of the previous month. US weekly jobless claims are expected for no significant change today. 355,000 new claims is seen as forecast for today compared to 357,000 of the previous week release, showing that the job market is currently steady with no bigger movements towards the negative territory. On contrary, a small build-up is forecasted for today, despite the recent quite disappointing release of last Friday's actually disappointing release of U.S. non-farm payrolls data. U.S. core PPI is due at the same time, 12:30 GMT, 0.2% forecast, no change from the previous release. FOMC member Lockhart is due to speak at 1300 GMT, while his colleague Dudley is due at 1500 GMT, as well as FOMC member Raskin, who is due at 1930 GMT. So we have a number of speakers due today, and late in the evening at 2350 GMT is release of Japanese policy meeting, the latest policy meeting minutes. As I mentioned, no significant changes in our previous sessions. We mentioned that no significant changes in the Japanese rate policy, as they keep their ultra low rates, but keeping their finger on trigger in case of any situation that they will be ready to act and prevent any further more negative impact to the Japanese currency and economy in case of any negative movements. We are going to take a look now on the currencies and commodities and see the latest developments in the markets. As said, euro is still within the range of its recent base at 130.32, but the pair remains entrenched within the 130.50, 131.50 range, and still moving in a rather, I would say, rather sideways movement, with the bias slightly skewed towards the upside, as the hourly studies are still, in a way, positive, I would say neutral to positive at this point, but still struggling to regain our next significant barrier at 131.65. There was a spike higher seen in the yesterday. It was yesterday at 131.56 when the price action fell short of 131.65. No big changes in the outlook for today. Yes, the 131.65 previous week's high Fibonacci level and close to it is at 55 days exponential moving average that is currently limiting the downside and is descending. This break of this level actually is required to improve the current outlook, as hourly studies are MACD is approaching the midline while momentum holding above, but again slightly turned towards the downside. RSI is still pointing higher and holding above its 7 days moving average, and still keeps the upside in play as long as 20 days moving average at currently at 131.13, as well as 131.00 zone holding the downside. There will be potential scene of fresh attempt and possible break through our next key barrier at 131.65. A break here to resume the current recovery, near-term recovery of 130.32, and the levels to watch on the upside: immediate 132 zone, figure resistance at the 50% retracement ahead of previous low at 132.53, whereas close to this is a 61.8% Fibonacci retracement, and basically break above this level is to refocus the upside targets at 133.80, stronger resistance zone where the recent action of 130.00 base was capped. On the downside, as the daily structure remains still negative, you can see that all studies are well below their midlines and still pointing lower, and 20 and 55 days moving average coming together at 132.10, together with the main bear trend line at 132.22 currently, the bear trend line of 142.46 peak, connecting also the 134.85 top of 2012. As long as these levels stay intact, the risk is seen towards the downside, and downside remains vulnerable with critical supports at 130.00 and 129.73 that mark the floor of the 2 months range, loss of which would turn the broader outlook, broader picture more negative, and will open way for a fresh bear phase for possible extension in the short term towards 126.22 yearly low of euro dollar posted on 13th of January 2012. So basically on the upside, initial resistance 131.65. Next very significant barrier is at 132.20 zone, and only break here is to improve the current structure that is still negative as shown on the daily studies, and the break above this barrier to refocus next very strong resistance at 133.80 zone. On the downside, as studies remain negative, first support 130.32 is the recent low of 5th and 9th of April 2012, and then, as mentioned, critical support 130.00, 129.73, a break of which to turn the outlook more negative and signal a resumption of the short-term downtrend of 134.85 double top of end of February. Cable is in a near-term recovery mode as it hit 158.00 zone that so far offers good support, and the basing attempt here is seen now as the pair is attacking the recent range ceiling at 159.30 zone. There was a brief break seen yesterday to 159.37 and this morning to 159.35. Marginal ticks above this level, that does not mean much as long as there is no clear break and the regain of minimum next Fibonacci level at 159.63. That is the next upside barrier. A positive outlook on the 4-hour chart, as well as studies still in the positive territory on the hourly chart, with 20 days moving average maintaining the current rally in past from yesterday, basically. Keep the upside still in focus, but as said, we need to see the clear break above this zone in order to resume. Attempt of 20 days exponential moving average crossing above 55 would signal that possible further development towards the upside is going to be likely scenario, and break here and the 159.63 is to confirm the base at 158.00 and open way towards our next barrier at 160.00 as a round figure resistance, and the previous yearly peak at 160.61 posted on 2nd of April 2012. Strong support now is offered at 158.42, 200 days moving average that the pair in past 2 days holds above, and closing yesterday's closing above this level keeps the more positive tone for the pair for possible extension towards 160 and 160.61, while break below 158.42 would risk a test of another very strong support at 158.00, where is also the main bull trend line drawn of yearly low at 152.33 through 156.00, 12th of April higher low, and the break of this level, where is also the 55 days moving average currently at 158.25, would be very bearish, and the likely scenario would be extension down towards 157.00 initially, ahead of another strong support at 156.40-50 zone, and the key short medium term support at 156.00, 12th of March higher low. That is also marking the past 2 months range floor. Dollar yen remains within a very narrow range, and sideways, still sideways movement on its latest bounce of yesterday's low at 80.57. This was our initial target after we lost 81.05 Fibonacci level. This was the next target at 80.57, lows of 6th and 7th of April. That pair yesterday tested, but no further extension lower, as 55 days moving average currently at 80.48 holds the downside for now. A recovery attempt is so far seen limited by 81 zone, where it's a 55 days exponential moving average on the hourly chart, with studies slightly improving at this point. However, not much to expect, as we can see on the broader larger picture, that trend is still firmly down, and all indicators are pointing lower, with the corrective action seen as analysts say, just a selling opportunity, unless break of 82.00, our next strong barrier is seen. Otherwise, any bounce above initial resistance at 81.20 and 81.85, which is seen as the next strong barrier, is just seen as correction before the pair resumes its retracement of the broader uptrend from 76.00 base that peaked at 84.17. As said, only a break above 82.00 would ease the current bear pressure and open way for a further extension higher. 82.54 and 82.66 are the next static barriers ahead of a more significant 83.00 and 83.30 zone. Dollar Swiss also is in the consolidative mode, with the range with the tone slightly skewed towards the downside after hitting a high at 92.21, where the gains were limited. A brief break yesterday below the range floor at 91.40 zone, and also denting the 55 days exponential moving average that is currently at 91.42, may signal some further weakness of the pair, near-term weakness, with the loss of 91.27 yesterday's low to open 50% retracement at 91.12 and more significant 91.00 level break of which, and also the previous high at 90.89, high of 29th of March, and the 61.8 retracement to confirm the top at 92.21 and refocus base at 90.00 for retest. Holding above this level 91.27, 91.40 might signal some further extension of the current consolidation, and the range trade. Only regain of 92 would turn the picture more positive and open way for a test of 92.21 and possible extension higher. On the daily, studies are at this point rather neutral, with the immediate support of 20 days and 55 days moving averages around 91.30. On the upside, the strong barrier is 92.30, 92.20, the static one, and 92.30, 90 days moving average, and the main bear trend line. And also this is the triangle resistance, and only break above this level would improve the short-term structure, and the recent bounce of 90.00 will look for extension towards the next significant barrier set 93.00 and 93.33, peak of 15th of March 2012. Gold remains rather neutral during the past sessions, as a positive tone still exists after a bounce seen 2 days ago from 1631, sharp dip and then quick recovery up to 1660 zone, with the pair holding a very narrow range and moving in the sideways mode, with studies on the hourly chart being neutral. More positive but slightly toppish studies are seen on the 4-hour chart, with immediate barrier of the trend line resistance currently at 1662, just above our recent highs. A break of this congestion zone now and the trend line resistance is required to resume the near-term recovery of 1612 and open the next significant barrier at 1683. As mentioned in previous sessions, as there is no more significant changes in the gold in past sessions, so after yesterday's update, we have the standard barriers for now at 1683, and the more significant around 1700 zone, where is also the 200 days moving average, and this is the critical barrier. A regain of these levels would significantly improve the near-term structure and open way for further recovery of the pair, as it dipped from 1790 recent peak, has so far recovered approximately 23.6%, slightly about 23.6 of the entire move down from 1790 to 1612. On the upside, as said, 1700, 1680, 1700 zone is our critical and very strong barrier, and the break here will open way for next barriers 1716 and 1722.25, which marks also 61.8% retracement. That will refocus 1790. On the downside, the immediate support is at 1612, 1628 previous low, and 1612. Just ahead of this is 1620, the main trend line, bull trend line drawn of 1522, going through 1612. Loss of this level would risk further weakness and possible extension towards our very strong support and double bottom at 1532, 1522. A quick look at crude oil, that is back to strength in the near-term action. Basically, it's congested now above its recent low posted 2 days ago at 100 0.67 with the 103.38 I mentioned yesterday. I think in our analysis that acts as a strong resistance and this break of this level would allow for some stronger recovery. 55 days moving average currently at 103 is capping the near-term price action with break here and 103.38 to open way for some stronger move higher. Above this, another dynamic resistance, 103.82 is the 55 days moving average. Studies on the daily chart are still in the negative territory and they still keep the downside vulnerable for possible test of 100 psychological support, while regain of previous stop of 2nd of April 2012 at 105. First 104.30, the previous range floor as initial resistance, and then 105.45, 2nd of April the high, along with the 106.37, where is currently the bear trend line of recent peak at 110.53, would improve significantly the structure of the crude oil and open way for a possible extension up towards the next significant barrier at 108.68. A failure to clear the initial barrier at 103.38 and 104.30 would keep the downside still in play and break below 100.67 to open $100 per barrel as our initial barrier, with possible further weakness seen below at 195.43 and before this 95.83 is the 200 days moving average. Overall, the fundamentals for crude oil remain still rather negative, and see potential of a further increase of the price as current crisis with Iran, with the meeting on Saturday in Istanbul, are expected to give us some more clues what will be the next and future movements of the crude oil. But just to mention that any crisis in the world affects firstly the crude oil and the gold, so I think we might expect further gains in the price as current negative, I would say rather negative situation worldwide doesn't see any potential. Again, despite comments and the willingness from Saudi Arabia to cover any gaps in the supply, even mentioning that they are ready to go to the full production just to prevent further increase of the oil price, would not work as situation in Iran and the current situation with Syria do not look that optimistic. That would be more significant reasons for further easing of the oil price. That was all for today. Thanks for attending our live session. We are back tomorrow at the same time at 7:00 GMT. Have a nice day.